Yes, good evening. Good evening. Hello. Can you hear me? Hello. How are you, sir?
Video, gone through video, and the first things that I learned, first of all, I followed about analyzing the market, and I followed the what you are saying about the candlesticks. So I just do like as if I restart what new, but I wanted just to restart everything afresh. So I learned about the closing of the candle and the opening of the candle. That was so amazed because I even increased my knowledge.
Okay.
In the market, you need to go to the lower time frame, like 30 minutes, like 30 minutes, and also 15 minutes. That's what you advise to go to the for the entrance of the market. And you said for a minimum, like a confirmation time frame, when one want to look for the market or the entrance, it need to go through the 30 minutes time frame. So these are the major things that I've learned. And so far, you speak. And also, what I didn't understand properly, it was about the order block. But I tried to learn where you were teaching the lady of saying that when the price is tested the line 2 or 3 times, then that line is confirmed. That place is confirmed. But that's what I understand. But I cannot say that I understand it fully, because I also need some, at least some full information from you as a mentor, so that at least to increase some knowledge. So about the things that I've not yet at least have a full knowledge. It's about how, and you can identify, you can put the line in the chat, because I did exactly when you are teaching yesterday. I was practicing it immediately in the live account.
Okay.
And I did manage to make $10. I was watching, practicing in the same time. I managed to make $10 yesterday, last night.
Okay.
So what I'm not yet good at, it's how to get an entry and how to know that exactly the market is still selling, or this time now it has changed the direction.
The direction,
so
okay.
That's okay.
Okay. Okay. I hear you. So, like, just to summarize what you're talking about, the market will always move. It will always move in something like this, whereby, let's say we're going down. Okay, let me remove this. Let's say the market is downtrending, right?
Yes.
Or before even the downtrend, either you can find a range before the downtrend, or you can find a double top or a triple top, or a head and shoulder, right?
Yes, sir.
So those things are things that you can find before it starts to downtrend or uptrend. So basically, when the downtrend is happening, you are just looking at the market structure. It's the most important thing, especially higher time frame market structure. Higher time frame, I'm referring your 4-hour, your daily. That is higher time frame market structure. So when it's downtrending, we know that the market has to form lower highs, right?
Yes, sir.
Downtrending will form lower highs and lower lows. Low, 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 low. So meaning, this means that this lower high, this lower high, this lower high, so long this market, it plays below this lower high, it's still in a downtrend. We haven't changed the market structure. We haven't changed the direction. So oftentimes it can even come and play around close here. Fail to break, play around with it, fail to break, then go. So when you have marked your levels like this on the 4-hour or daily, when you've marked these major levels, and then on smaller time frames, you see the market changing structure on smaller time frames, but on the daily or on the 4-hour, there's no change. It means we are still moving in the same direction that we've been moving in. But the smaller time frames, what they do, they just tend to confuse a bit. They confuse you a bit because they are smaller time frames. That's what they do. So at the end of the day, the market will always go in the direction of the longer time frame direction. So the high time frame direction is the most important direction that you have to always look at. Even though entry points, we use our smaller time frames, like the 15-minute, the 30-minute, and the 1 hour. We use those ones for entry points. But when it comes to analyzing, when it comes to targets, when it comes to major zones for buying, or major zones for selling, or major zones for taking profits, you look at your higher time frames. Look at your 4-hour, look at your daily. If you can go to the weekly and the monthly, it's also fine. But 4-hour daily going up there, those are the highest time frames that you need to look at and consider for the overall direction. So same thing for an uptrend to happen. So if ever we're in a downtrend, before the market shifts the direction to go into an uptrend, it has to form, either we have to see a shift in market structure. This is the higher low, lower high, I mean, right?
Yes, sir.
That's the lower high, and this is the lower low. This is the lower low. So either one of these things has to happen before the direction changes to go up. Either it has to range in this lower high and lower low area, then break this lower high to make a high high, retest, then go, right?
Yes, sir.
First possible scenario. Second possible scenario is for it to come break this lower low, form a head, come back to this lower high, reject, come back here, forming a higher low. This will be a higher low now, higher than this one. Come back again to the lower high, make a higher high now, because this is higher than these highs. So meaning we now have two confirmations, the higher low and the higher high. Meaning that's an over, that's a change in direction. Higher low and a high high. The direction has already changed.
Because this is exactly what I see in VIX75. It has reached the lower low. I can say the support which you are giving us, and it also turned up.
Right now, it's actually a good buying opportunity for the VIX.
Okay.
Right now, it's actually a good buying moment. Your stop loss just below there. So it's a good buying moment. So according to what I'm saying, I'll go to the higher time frame. I'll go to the higher time frame, but according to what I'm saying, I'm just saying this is a lower high, lower low, lower high here. Then here we fail to break this lower low, right?
Yes, sir.
Then here we're going back to this lower high. If we break this lower high, that's a change in direction. It's a confirmed change in direction, of which this one will be double bottom, break the lower high, form a higher high. From a higher high, we want to make a higher low, right? Either there,
yes, sir,
or even somewhere higher than this low. You can come there, then go. So long it's the low is higher than this one, that would be a confirmed change in direction. So it can even come here. That's still a higher low. That's still a higher low.
Okay.
Because it's higher than this one. So right now, if we go and break this lower high, that's a first confirmation to say most probably the direction has changed. So right now it's actually buying time for the VIX. You can even buy wherever you are. You can actually buy.
Yes.
Right now you can even buy your stop loss just below them.
Yes, sir. So how can one be aware of saying that? Because I was watching, you were telling the sister of saying that there's a time where the market can trap you, can trap you, of saying some people, it can trap some people just to confuse people. So how can one be aware of that trap, and how can you discover it and escape it or not enter in the market? Okay.
So what you do in order to avoid such traps is to make sure that you're always entering confirmed trades. Confirmed trades are trades with fully confirmed information. With fully confirmed information, like you need to have various confluences supporting your entry. Various confluences supporting your entry. For example, here, this entry, that's a double bottom. Okay. Number two, we are at a level of support on the daily, right? That's number two. Then number three, this candle, if it closes nicely, it can actually be a bullish engulfing. So already I have three confluences already supporting that one entry. So traps, they come when you don't have quite a number of confluences supporting your entry. And most of the times, if ever people are trapped, they are usually trapped when they place stop losses wrongly. When you place a stop loss wrong, you can easily be trapped. You can easily be trapped. For example, this one, if you check this one, this candle, if it closes bullish like that, someone can come and place their stop loss just below this candle, of which that would not be an appropriate stop loss, because you're not giving room for this market to move. So it can actually come, take you out, then continue going. But someone who places it just below, you're giving it room. You're saying this low and this low, if ever they're not broken, it will go up. You're giving it room to actually not take you out prematurely.
Yes, sir.
Yes. So that's what you can actually do. Just look for confirmed. Wait for confirmation of interest. For example, this move here, this bounce from here. One could have taken this move just from here to there, but that was not a confirmed entry. This buy from there to there, right? It wasn't fully confirmed, but someone who is going to enter this buy, this one now, it's a better entry than this one.
Okay.
Then one who is going to enter after the break of the lower high, that one is a far much better confirmed one. Far much better confirmed one, because forming a higher high, then the higher low, they enter on the higher low, either there or anywhere down there. They enter on the higher low. That's a far much better confirmed. And you understand?
Yes, sir. Yes, sir.
Yeah. So that's what you can also look at.
Yes. Something else before I forget, it's about you are talking about momentum. Thank God, because it is now first time I heard the word. You explain it openly, because I've been hearing momentum, but I never come across to know what is momentum exactly.
Okay.
And when I was watching the video last night, you are speaking with you are talking about momentum, and for me, I understand like as if you are it's a rejection of a candle, like the shadow of a candle. But what I want to fully understand, what can create a momentum?
What creates momentum is the presence of buyers and sellers on the market.
Okay.
Yes. So depending on where they are located, where are the majority of the big players, like the majority of the buyers and sellers on the market, where are they situated, right?
Yes, sir.
Those levels, they are levels of momentum. For example,
yes, sir.
For example, look at this price action here. I want you to look at this price action. In as much as VIX was selling in this zone,
yes, sir,
but there were no like aggressive moves to the selling side up until this area here. Check from here what happened.
The sellers, they were in control.
That area where we have such an aggressive move like that area, that zone, it's a zone of, it's called a zone of momentum. One can call it an order block. Yes, it's an order block, but an order block is actually a zone of momentum. Those are areas where the market can actually move so aggressively once it gets to that area. If it manages to break that area, it will actually move aggressively away from that area.
Okay.
Do you get
yes,
me?
Sir. Yes, sir. Yes, sir.
Yes. So momentum is simply when either buyers or sellers are gaining their momentum. So momentum, you can actually also look at momentum. You can actually see momentum by confirmations of market structure confirmations or candlestick confirmations. They can also show you that the momentum is now gaining. The momentum is now being gained either to the buying side or the selling side. If you check this zone here, this support area here, check what happened when the market reached the support area. Check this bullish candle. Check how big it is. That's a sign to say somewhere, somehow, this area, there is a possible level of momentum that is created on the market. So here, same as here, if this candle closes bullish, a gain in momentum, you see it by even the length of the candles. That's where you see huge bullish candles to the upside. When you see such, there will be actually signs of gain in momentum. You understand?
Yes, sir. Yes, sir.
So the size of the candle can actually show you that momentum right now is being gained. What else? The size of the candle can show you even the structure of the candle. How does it have any wick rejections, or is it a full candle without any wicks? A candle without a wick is like this, whereby you just see the body. There's no upper or lower wick. That's a sign that somewhere there's a gain in momentum to that particular direction. So if you check here,
yes, sir,
the gain in momentum, if you check even the length of the candles, check how big this candle was, check the next candle, check this candle. So they were getting bigger and bigger and big. But when they reached this zone, the selling, the bearish candles, they began to shift. That was now we call it a loss in momentum. When they are losing momentum and the bullish candles are now gaining momentum.
yes, sir.
Do you understand?
Yes, I'm getting, sir.
Yeah, that is it. So momentum is also another confluence that you can use to add to your entries. Momentum, a shift in momentum. You can actually take advantage of that. When you enter trades based on a shift in momentum, rarely are you going to be taken out on stop loss. Do you understand? So, for example, this move here to the downside, how can one enter using the momentum as an extra confluence? Let's say I want to enter on this candle here. On this candle, let's say here. I can even put my stop loss just above the candle. Momentum doesn't allow the market to come back and take out this high of this candle. If ever there's momentum, it will continue going. Same as if ever I enter on the next candle. Even if I enter on the next candle, then I put my stop loss just above the high of this candle. There. The trade could have even gone successfully. Same as this next candle. Even if I entered on the next candle, my stop loss just above this high of this candle. Check how it went. Same as if I entered on the next candle. My stop loss just above the high of the candle, right? Continued going. So that is also another way which you can use to enter using momentum. When you are entering using momentum, you can actually scale in a lot of trades just using the concept of momentum. So when you're scaling in now, it will be like, but your stop loss placement, it will be different, because according to momentum, entries, when they are entered according to momentum, rarely do you find the market coming to take out the previous high or the previous low. If ever the market is really moving in momentum towards that particular direction, rarely does it come back again to take out the previous highs or lows of that particular direction. Do you understand? Mr. Mjaki, how are you?
Good.
I'm okay. How is everything?
Yeah, I'm following the VIX75.
Okay.
So just checking. Does it have those funny things of grabbing the liquidity and all that? Marching here, like on daily, it looks like you're talking other blocks. Looks like it's now sitting on one. Yeah. Yeah, but like where the whole movement started, and now there's been one, 2 steps, and I think we're on the third one. The same.
Oh, yeah, you're looking at the you're looking at the you're looking at the Elliott 12.
No, no, not the zone.
Okay.
In which the market is pressing now. It has been tapped like 3 times from that other block I'm talking about.
Okay.
We are in the third touch now.
Okay, yeah. So right now,
So
buys can be taken even though on higher time frames they haven't shifted the market structure. So what happens is the smaller time frames they have to shift the market structure first, then they are the ones that will propel the higher time frames to shift their own market structure. You understand? So someone who can wait for the higher time frame to shift market structure first, you realize that they will actually enter later.
okay, like way
later. So yes. So it will be way later. So it's actually one who enters now using the smaller time frame shift. You can actually enter earlier. Earlier. Okay. Yeah, so this is the current what we are expecting for the VIX. I'm simply expecting a certain
now the
you have taken the buys.
Not yet.
Okay.
This level. Sorry, I came late. How many points? Like how many dollars for this one?
How many dollars is in your lot or your stop loss? Your stop loss is just, for example, minimum lot size is $3.
0.001.
0.001. It's $3 stop loss. So you just choose depending. Then yeah.
Okay.
I'll see.
Right.
So do you understand?
I get it, my brother.
Do you have any questions?
Not VIX. So waiting for, I think you said something like a later confirmation if we break that.
Yes, if we break this low high.
There.
If we break the
investment. Okay.
So yeah, we'll just wait and see how it's going to move.
Yes.
Then let me just look at one currency pair. The one that I focus on most is GBP/USD. It's on an interesting level. You can actually also take advantage of it.
Okay.
It's actually on an interesting. So GBP/USD has been downtrending ever since the beginning of this year. So if ever one really swing traded it, I think so this is the lowest price so far that I have for the GBP/USD. This white line here at 1.14, that zone, which is almost in the zone. It's almost on the area in the zone there. So from there, I'm actually expecting just a shift in market structure on smaller time frames. I will enter. Then I actually expect to at least hold it for quite a while. I feel like it's going to move, because if you check this zone, check how it moved impulsively from this zone. Impulse move there. So same as here, I'm expecting something like an impulsive move to the upside. So to the upside, the next level that I will be looking at is the lower high. The lower high, according to what we are looking at, it will be this level here.
That's on daily, yeah?
That's on daily now, because you would want to hold it further to up until it reaches that lower high. If it breaks the lower high, you know that the market structure has shifted on the daily. And when you know that when you see market structure shifting on the daily.
I had fallen and like
what?
Where you just put your just below the resistance, you just draw now. Yeah, I was looking at the that neckline of the there's an order block there, so I was looking at that.
Yeah, you can also look at order blocks and everything. You can also look at them. But one thing that I've realized on currency pairs, especially this one, the GBP/USD, it follows price action very, very much. Follows price action very, very much. Whether you're using the smart money concept, which we are going to talk about in Smart Conference Trading 3.0, or you're simply using simple basic market structure, simple basic price action. If you use it well, it follows and respects all those things. So this one as well, I can also use it as a level of resistance for the buys that I will take. So just imagine how long I'm going to hold this buy. That's the good part about trading these currency pairs. So you just choose one currency pair that you want to focus on, and you can actually decide to. Currency pairs, they tend to, when it comes to swing trading, they are so nice when it comes to swing trading, currency pairs. So here,
I like
yeah. So currency pairs, they are good there. So here I want either a double bottom, a triple bottom, whatever. Just a shift. Then we take our buys.
Oh my God. Yes, this is nice. I was actually looking at it, and what was that? Then there's anyway, you don't trade that. EJ.
GJ.
Looking at EJ.
Or EJ.
Yeah.
Okay. How is it?
From my look of sight, from my side, it looks like it's also in my view, I'm expecting it to be bearish.
EJ. Okay. Let me just. EJ.
There it is.
EJ. Okay, so EJ, looking at it from the daily perspective.
It's bullish.
Bullish, yes. Bullish, but there's a shift in market structure.
Just changed the chart, yeah.
Yes.
Like it's just changed the bullishness. Yeah, where it is now. Yes.
Changed there. Came back to this order block. Respected there. So now we are here on this order block now. Yeah, it's going to fall this one.
Yeah. And on H4 now, it's even making clearer view.
Bearish engulfing.
Yes.
Interesting. That is a. It's simply going to fall. Double top, neckline break, retest.
Yeah, break and retest now.
Yes. So you can look at this thing from a lot of directions, a lot of angles. You can actually so that is it. It's going to fall.
So I was taking, for example, this is, I mean, the same pair that analyzing them from the trading view is way better. Because if I don't know what MT platform, whatever 4 or 5 you use, does it show that that a bearish engulfing yet? Because on X Global FX on MT4 it doesn't show that bearish.
MT4s and MT5s, they are manipulated.